Hello, everyone, and welcome back to another episode of Franchise Your Success. Marjorie Roman here, and we have, sharp as always, Dan Olsen.
Oh, you're very kind. I'm always
I love
excited to
your
be here.
jacket, by the
Oh,
way.
well, thank you. It's a different one. I found this jacket when I saw it on the rack. I said, that's the same, almost exactly the same jacket my dad, I remember him wearing. I have a picture of him in it. And back in like the 1960s when he was a principal of a school. But my dad was also an entrepreneur. So I think I got some of that from him. After he was working with his job in education, he'd be home working his insurance business and other businesses even. So he was my first mentor. And so it always reminds me of him whenever I put this on. Thank you for noticing, because it's just a special time to be able to remember someone who mentored you and helped you succeed in life and got me that start that I needed. And I attribute a lot of that to my dad. And, that's what a franchise does, by the way, is it brings you those mentors. It brings you those coaches. It brings you people who care about your success. And so when I think of my dad, what he did for me, I'm so grateful that I had that example, because as I've grown in the world of franchising, I've seen a lot of other people who have needed that help and just were scared about taking this step. But my team and I, over the years, have been able to help hundreds and hundreds and hundreds of people get over those fears and jump into something where they've succeeded big time. Never even imagine. I mean, I was just thinking of this guy this morning. He was a little bit older than me, but the guy was doing, I don't know. Anyway, he was doing tens and tens and tens of millions of dollars per year in sales with his franchise units. Tens and tens of millions of dollars. That's possible. I mean, I can't guarantee that. And you got to pick the right franchise, and there's a lot of other factors involved with that. But that's what franchise companies do for people. When you pick the right one, is they have those mentors, and they will do everything they can to help you succeed. And so I don't know. That just kind of took me on a side note there, Marjorie.
You're totally fine, and thank you so much for sharing that.
But I'm grateful to be able to share my feelings on this program, and that you've tapped into that.
And we're grateful to have you as our mentor.
That's kind of a different thing to start out with, right?
No, you're totally fine. And we are grateful to have you as our mentor. It's truly amazing to see how much knowledge we didn't have. And thank you for sharing your experience with us within the industry of franchises, because we were a little bit scared of getting into franchises, because you don't usually get to talk to a franchisee and say, how's your franchise doing? Answer these other questions that I have. But by you sharing your knowledge through this podcast, I feel like every single episode we get to learn more about franchises and feel more confident on investing in this, because truly franchises is opening their arms so we can invest in them.
Yes.
And now that we're talking about investing into a franchise, we're going to talk about like the ways that we can fund a franchise. How do we get the money for it? So I know that there's something called SBA loans. So what's an SBA loan?
Yes. So when you start a business, any business, guess what? You got to have capital to start it.
That's right.
You can't, unless you just maybe you're able to do some sweat equity or some time in it, you got to have some type of capital. So the Small Business Administration has been something that's been around for many years, short for SBA loans, and they tap into government funding and government support and backing for a typical bank who is usually using that backing. So you typically go through a bank that has the SBA support, or sometimes other financial institutions have that support too. And there's ways to be able to use that fund and have it backed by government. And so over the many years that I've done this, usually, let's say that a franchise costs $200,000, just ease of calculation to start. That includes all the equipment and the build out and inventories and things like that. There are certain things that are financeable by the SBA. Some things are not, like operating capital typically. But what we've seen happen is people can jump into the SBA loan, and there's streamlined processes now too. The interest rates were very, very low, still low compared to what they used to be in the early days. But as we got people into these loans, so whenever we qualify someone and we say, okay, you need to have about 25 to 30% of the total amount down. So if you've got 200,000, you need to have 30% of that. In this case, that would be, if I did my math right, $60,000. So you've got 60,000 liquid, and you have, we always tell them, fairly decent credit. And by that current standards, and it changes, and the banks may change a little bit what they want to see, but sometimes it can be as low as about a FICO score of about 680 that we've seen. So it doesn't even need to be the 700 point. But that depends on the individual and some of their assets and backing. So the SBA process is usually done by a bank, done by even a loan service company or company that specializing in producing small business loans. And they have different vehicles like the SBA to take you through and get that process going for you. And so usually it's nice to have someone, a middle person that's worth maybe a little bit of extra origination fee or whatever is paid, to have that person guide you through it and get it done very, very quickly. But typically the SBA government, it's a government-backed program, is usually, when we hear government, we're thinking, okay, it's going to take a long time. And it usually takes some time to do that. But there have been some in years past, and then of course, the date of this recording, it may be different from time to time. It changes all the time. But in years past, we've been able to see some streamlining of that, where you put your application in now, and it's not that difficult of an application any more than a home mortgage would be.
Oh, wow.
In many cases, like I say, it changes from time to time. But you put that application in and you start that process. And as they ask for the information, usually they need to see that you've paid for the franchise fee and how much that was. They may want to look at the agreements that you've signed. They may want to look at any stipulations that the franchisor has on that particular opening. And there's also what's called an SBA registry, by the way, where franchise companies have already registered their franchise, and makes it much more streamlined to get that process through. So you may want to ask about, are you on the SBA registry? So that's kind of an important question to ask, because that helps it streamline even more. But by the time you get through that process, it might take 5, 6, 7, 8 weeks to be able to get your complete funding. And in many cases, what I've seen in the past, and it can be different from place to place, but let's say you have a $50,000 franchise fee, and you pay that franchise fee up front as part of your down payment. What I've seen in some cases is you go through that funding process and you get that franchise fee back. So that $50,000 comes back to you in financing, and you can take that $50,000 and use it for operating capital to get your franchise moving forward, or for certain things that the SBA is not loaning on money on. Now, our experts can take you through exactly what is financeable through the SBA and what is not. So it just depends on a lot of different factors on that franchise company. Now, we have people coming to us in many cases that are looking for a master franchise, or what we call an area representative franchise, where they own an entire territory, like state of Georgia or San Diego, city of San Diego, or surrounding areas. So, and they may acquire that for a couple $100,000. Usually that's cash, and a lot of them get that out of their 401k or whatever. But as they put that investment in, the SBA typically does not loan money on that. Wow. But it does loan money on the initial franchise fee. And in almost every single case, you have a master franchise that you get that first franchise, single unit franchise, at no extra cost. So if it's a $50,000 franchise fee, as part of that $200,000, that part then can be contributed as your down payment on the franchise financing. So SBA, it changes from time to time. People ask me all the time, how long's the term? Usually it's a 10-year term. And the interest rates are a little bit above mortgage rates usually, so they kind of follow some of those interest rates. And so so for the 10-year term, sometimes we've been able to get certain programs which will extend the payment out so that you don't really have to start paying for 6 months down the road. It gives you a chance to get your business up and running and successful before you start having to make your payments. So we've seen those types of programs too. So it's really 10 and a half years if you look at it that way. So once again, we have experts that are up to date on the latest and greatest and the best sources, whether it's a local bank or whether it's through a national bank, through our national sources. We've got plenty of sources we can tap you into to choose the right financing program to get your franchise off the ground successfully.
And it's incredible how there are so many opportunities for loans. And it was really cool how you mentioned that getting an SBA loan is kind of similar to getting a home loan. I feel like most of our audience, they were like, oh, wow, there may be so many requirements that we just don't know about. So speaking about the requirements, what are some of the requirements that we would need if we were to request an SBA loan?
Yeah, so it changes all the time, and different banks acquire different companies or different requirements, but they'll just want usually a personal financial statement. They'll look at one of the things that they will require in almost every case that I've seen anyway, is they want to see some income coming in. So you could have, for example, you could have $300,000 sitting in the bank, and you could go start the franchise yourself and just fund it yourself, but you have no income coming in from a job or other business. They're going to say, well, I've seen this happen time and time again. Well, you don't have any income coming in, so we really can't process your loan because you've got to have some cash flow coming in. Worst case scenario, you got to be able to make that payment on the SBA loan. And it's usually not that much. And so they're able to get you through that as long as you have that job or another business where you have some cash flow and you can show that. So they'll want to see those documents. It could be W-2s, tax returns, whatever, those types of things, kind of like what you'd turn over if you were getting a mortgage. So that's probably the most critical things, is they like to see the cash flow coming in already.
Oh, it's really cool. And it also gives us a chance to be able to qualify for these SBA loans. So one of the things that you mentioned in previous podcasts is how franchising can be, as a semi-absentee owner, really flexible with your time, because you can still keep your job, so that way you can get that income and qualify for the loan, the SBA loan in this case, and at the same time, like later on, invest in your franchise, because you already have these cash flow that is coming from your current job, and you also have the flexibility to actually go and take care of your franchise.
Right.
And
one of the thing about that too, though, is if let's say you've got your cash flow from your job or other business over here, which allows you to get that SBA loan to start with, then what happens is once you get your location open, now you've got cash flow coming in from that. So the SBA or other loan sources are more than happy to loan you even more money, perhaps even close to, depending on the source, close to 100% to finance your second and third and fourth locations. So once you have that initial cash flow on that first location, it's usually easier to get more cash or more funding for the second, third, and fourth location. And that's what helps you to build that little mini empire and getting many locations out there.
And it's really cool how there are so many opportunities again to like actually fund your investment on a franchise. So what are some of the benefits and the current opportunities that we can get right now with an SBA?
Those typically, like I said, it changes from time to time. And my suggestion on that was to get with a member of my program and my team, and let us evaluate you individually, because everybody's different. Whether or not an SBA is right for you, that's a consideration, and it is for a lot of people. But let us help you do that. So I would suggest let's sit down with you, or obviously a Zoom meeting or call, and we'll give you the sources to go to. And there's a lot of different sources that we've used over the years that are consistent, that work to your benefit, and will get you the best deal. And sometimes it may not be an SBA loan.
Oh, so what other types of funding can we get then for franchising?
We're working with a guy right now, and I've done this over the years. He's got all this money in the stock market. He probably has $350,000 $360,000 worth of stocks right now, securities. So we have a program, or not a program, but we have a source that has a program that can tap into that and use the securities as collateral for the loan. And so usually you can so you don't have to sell your stock, because if you think it's going to be hot and it's going to continue to grow, you don't have to sell it. You just get a loan against it. And it's safe because the stock is there. As long as the stock continues to grow, you're in good shape. And then there's certain guarantees and there's certain stops that they can put into place to look at that. But that's usually a simple way, and that can usually be done in sometimes a couple of weeks. Boom, they turn your money around really quick because they see your account, they know the stock's there, and they can tap in. They don't have to sell it, but they can loan you money against that. That's one of the popular ways. The other thing is, if you've got fairly decent credit, I've seen people just go to their bank. They've already got a relationship, and they say, "I'd like to put a loan in here for $50,000," or I've even seen high as a line of credit for $150,000. Now, today's economic times, it's a little bit different, so you'd have to check bank by bank, credit union by credit union, or wherever you do have your financial institution that you work with. But you can sometimes go in there and just sign on the dotted line, and they give you that line of credit. And here's the other one, Marjorie, that's kind of interesting, a little bit higher interest. But I've seen people have 4 or 5 different credit cards.
Oh, wow.
So they'll go finance it on their credit cards and they'll start at that. But obviously the interest rates goes higher on that. Right. So you want to get those off, but still is what the question there. If you got a 20% interest rate on a credit card, but let's say you find a franchise that produces 100% return. Once again, we're not guaranteeing that, but let's just throw that out as an example. If you find that right one, it's getting 100%, and you're paying 20% on the credit card. Is it worth it to do that? Oh, yeah. I mean, so that's the thing you want to consider. But then the other big one where we're getting a lot of action right now is the HELOC, home equity line of credit.
That's right.
And one of the other podcasts, we just mentioned this, that we have people all the time that are sitting there in their home and they don't realize, because they're happy about the equity that's happening in their home, and they're happy about what's going on, and they're feeling good, and their payments here, rather than being way higher here if they had to buy a house today. But is that equity doing you any good? Or you could be leveraging it to buying a business or acquiring a franchise, especially, to be able to get that higher return and utilize that equity in the home. And it's usually fairly quick to do that. We see people 3 weeks coming back with 100,000 line of credit or 150,000 line of credit. And they can jump into pretty much most of the emerging franchise companies or decent franchise companies with that kind of funding in mind.
And it's really cool how you can use those creative ways to actually find the resources for getting your franchise. And it's really cool about the HELOCs, especially in this market, because I feel like they don't realize that they have those resources there waiting for them to just tap into them and make them grow even more on their own empire. And I feel like, as we mentioned on the previous episode, we truly can increase our revenue, our retirement plans as much as we desire based on franchising.
Yes, absolutely. There's other things that you think of the many, many different ways of funding a franchise. So the message I want to put out here today, one of the messages anyway, is sometimes people are afraid of that $100,000, $200,000, $300,000 investment in a franchise. Or are you afraid of that when you bought your home? How much you're going to buy? Today's homes in certain markets, I mean, your minimum is going to be $450,000, maybe $500,000. There's certain markets, obviously, where homes are lesser valued than that, but the hot areas, you probably can't get one for less than $500,000, like where we are today.
Oh, yeah.
You can't even get that. So are you nervous about that? Where your home, it'll increase in value, but if you're investing in a business like a franchise and you're choosing that right franchise where you've got that better return, that's huge. So what we a lot of times do is we'll go back to the franchisee, especially if they're younger, and maybe they don't have the funding quite yet, but they have a good track record and people trust them. Then we see this all the time where we have friends and family that trust them. They approach them and say, hey, this is a franchise. Here's the numbers. Here's how it works. It's got a good success track record, 90% plus success rate, whatever that is for that particular franchise. So would you believe in me enough to help me fund this? I've only got X amount of money. If you could add another 50,000 or whatever to it, and I'll fund this franchise and I'll grow it and I'll do a great job with it. And then you'll get your money back plus, or sometimes they may want to just invest with you and split it. And I've seen that happen too. But if you're the type of person that feels the passion and desire that you can invest in yourself and go out there and build something very special, then there's no reason why people would not want to invest in you. So that leaves basically no one out of the franchise world. If you really have that desire and you can feel you can follow the system, and you have the passion for that franchise system that you're working with, that passion will rub off on others and they're willing to invest in you all day long.
That's right.
So you're not out.
And I feel like another comparison that we can also do when it comes to like these fears of like investing into a franchise, because they usually take a look at the $200 and something and they're like $200 and something thousand, and they're like, oh wow, that's a lot. But even if you think of it, like me as a college graduate, I remember paying like almost $200,000 just for all my degree.
Wow. Yeah,
so
it's gone up, hasn't it?
$200,000, like, and we are used to just paying them for like tuition for like, I mean, as the whole 4 years college tuition, right? But I mean, we're not scared of that. So why being scared of getting a franchise?
That's a really good point, Marjorie. We've made that a point before, I believe, in one of the podcasts, but that's very worthy to bring that back up, because, I'm not saying don't stop your education. Education is worth it, especially for certain things, but maybe it's not. Maybe go get a feel for college life, what it's like, and get a little bit of that education. But if you find the right franchise, rather than spending another 3 years going through that and coming out at the end with a sociology degree or whatever, what's your job look like after that? I still see people coming out with their degrees, and they're even in today's day and age, they're making their $45,000 a year.
That's right.
You can go out and get that without that college, and even better than that. I mean, I have a daughter with no degree, anything. I think she's probably closer to $65,000 a year with no degree. I mean, I'm not saying that's the way to do it, but it's an option. So 3 more years of college, spending $50,000 a year for tuition, books, and housing, and whatever else you're doing. Yeah. What if you took that money now and you even went to work over the next year, 2 years, built up some money, and then you turn around and invest that in a franchise about the same time you're graduating from college?
That's right. Imagine just graduating from college and already having your empire
and have
built.
Your little mini empire started.
That's right. Well, then again, the possibilities are just limitless for funding your franchise. So to all our audience right there, you have so many options. And if you ever have any questions, well, we have Coach Dan in the house, and he's more than happy to help you. And his team are also willing to help you as well to succeed on your next franchise investment. Thank you so much to our audience, and see you on the next episode. Bye-bye.
Thank you.